Hey everybody, this is YL with Crypto 10x. In this video, I'm going to share my ideas and thoughts of market cycles, psychology of markets, and human emotions. So this is a chart that's been circulating the web for many years. You can compare this with tons of different charts in stocks and cryptos. You can see this pattern happening and the cycle happening everywhere. So you start off with disbelief, hope, optimism, belief. You get up to thrill, euphoria, everybody's gonna get rich, and then you come. This is the first sell off the top, and then it comes down, and this is what we usually call the bear trap, where we're at complacency, comes back up. Everybody thinks we're coming back up for the next rally. We just sold off a little bit, and then boom, we come back down harder to anxiety, denial, panic, capitulation, anger, depression, and then back to disbelief, and then boom, a full-on market cycle. So this is called the accumulation phase right here. If you learn this chart, you can make some really good money if you buy on the confirmation of a new market cycle. Then you can just sit back and take the ride, and you don't know where the top will be, so just keep pulling out profits. So let's look into examples of this market cycle, of this human emotion, and let's see what if we can compare that chart with a couple of charts we take a look at right now. So this is Bitcoin. We're going to take a look back in 2014 when it played out a full market cycle. So I already put the words up ahead for you guys. So let me just move them. So here's disbelief. You don't think that this is going to go any higher, then it keeps going higher. You get into optimism, and then to belief, you put all your money in. Then thrill comes in, you put everything, you sell whatever you can, you try and get a loan, you try and mortgage your house to put it all in, and then euphoria, everybody's going to get rich, everybody's going to buy a Lambo, and then the first sell-off comes. This is where the top comes, and then we come down. We take a leg down, and once we come back up, this is usually called the bear trap. You think we're going to go for a bigger rally. Maybe this is what we needed for a bigger move up. But then we usually come back down to anxiety, denial, panic, anger, and depression. And then people end up selling. So you have to keep in mind there's people coming into these markets every day, and they're buying the market price. Whatever day they're coming in, whatever day they get introduced to the market, they're buying the prices at market every day. So take the advantage of learning this market style and market cycles and a little bit of technical analysis, so you're not just like that person buying every day at any price you seem or you think that is logical to buy at. You want to kind of get the advantage and buy at the dips, buy into smart times. Like you wouldn't want to buy, let's say, Bitcoin, for instance. So let's look at Bitcoin right now. It's playing out a huge market cycle. So this one was in 2014. I believe that after market cycle plays out, the next one's going to be larger. And this one exploded. This market cycle took almost a year and a half to come back and play out and come back up. So if Bitcoin does drop back down, that dropped about 88%. If Bitcoin was to drop 88% from the top and repeat its pattern, we would see the price at about, let me redo that. We would see the price at about, I don't know why it's doing that, 88%, 2100, which is possible, even 2900, 3500, which is more reasonable. I think 80% retracement from the top we could definitely see. So I can move the words back here. You see depression, and I can kind of paint the picture: disbelief, hope, optimism, beliefs up here, optimism, euphoria at the top, thrill, complacency, denial, anxiety. Oh, denial. Denial's. Oh, it's right there. Denial. Keeps screwing around with me. Panic, anger, and depression. You see? So this could play out another market cycle like this, and then come back up for the big move we were all waiting for. So this is where we're at this year. When we came up to the 15K mark around here, tons of people thought we were going to go to 100K. Everybody and their mother thought we were going to go to 100 or 50K. People were selling their homes. You saw it all over the news. People mortgaged their houses. They were getting loans. This was tons of media attention, and frankly, that's a good time to sell. Everybody wants to get into Bitcoin. Everybody was a Bitcoin expert. Everybody thought it was going to 100K. Everybody was winning. Everybody was making money. That's not how a market works. You're just building that false self-confidence because you did good on one trade or two trades, and then you just get wiped out. So it's important to stick with reality. If you see profits, take them. You want to take your profits, rip them out of the markets actually, and use it to buy more coins at a cheaper price range, like maybe in the accumulation. So this is just an example of a market cycle in Bitcoin. Let's look into another coin like Ethereum. And I'm pretty positive we will see that. Let me just remove all drawing tools. Remove everything. So I'm going to pull out a better chart than this one. This doesn't have much data at all. Let's see Poloniex. $2016. Okay, actually, let's do that against the Bitcoin pair. I was doing that against the US dollar pair actually. So same thing, let's remove all drawing tools and let's look at some of these market cycles. This is a perfect one right here. Let's look further back and see if I can pull up more. Sometimes it's funky to play with. Okay, I'll start with this one and then I'll go into some more coins. So this is a perfect example of a market cycle as well. Look at where it retraced. It started from about 0.01, ended up at 0.15. So it did a 15x, 1500% here. And it retraced back down to 0.024. So that's a pretty big retracement. Just need my tools on the left side. Not sure where they disappeared. Let me just refresh that quickly. Trading views acting up, markets crashing. Just not a good day altogether. Okay. Oh, I think I remember what I did. Drawing tools. Let's go back. Sorry, new move, guys. Okay. So back here, Ethereum went from 0.10 to the top, 1200% actually, and then it retraced back down 85%. So you may be a long-term Ethereum investor. You may want to stack up Ethereum. I get that. So you may not want to sell your Ethereum, but there comes to a point where you could sell at the top, you can sell your Ethereum here, and you could buy back in here. Even if you couldn't get in it at this price, at least you can get somewhere here or here. and that'll actually help you accumulate more Ethereum. So if you're a long-term investor, trading at the top and taking some profit isn't a bad thing to help you actually accumulate more of that coin, especially if you're trading on market cycles, because you know that whatever goes up will most likely come down. Nobody knows where the top is, and nobody can call the bottom. If they do, they're just simply lying. You can find some great support at the bottom, and you can consolidate there. But what I like to do is buy on confirmations. I don't like to be the first person and just try and keep guessing where it'll start taking off. Just wait for the confirmation, looking at volume. So let's pull up some volume. There you go. So after this come down here, you can see so much volume, pushing it back up. So if you just compare it with this, same exact thing. Let's go to XMR. Sorry, I draw all over these, remove all indicators and drawing tools. Okay. So here's the same thing. Some of these charts don't go as back. You can just keep checking the different websites that do offer the history. So here's an example of the market cycle. Just going back here. Perfect market cycles over and over again. Over and over again. You see, so I spotted this with Bitcoin Cash against the Ethereum pair. So Ethereum BCH, BCC. No, it's BCH. It's the other way around. So just looking at the graph here and using Fibonacci, which I'll go into the next video, which I'll explain more. So looking at the graph here, Bitcoin Cash does these big market cycles, and usually Bitcoin Cash does some very impulsive moves. It's been pretty profitable to be in Bitcoin Cash, so you can see that it's done it here. It's used this line as a great support, and it's come up and come back down. So I put a buy around this line, try and get it as cheap as possible, and I just know that it'll come back up. And people holding down here may be depressed, they may want to sell, and they're uncertain of what's going to happen, and they probably bought up here after all the hype, so it's important that you don't fall to the hype, that you don't read a Facebook status, you don't read something online and you just go buy the coin right away. You want to do the homework. You want to put in a solid entry. You want to get an entry, let's say around here, and you can see that the prices never fell below here. So let's just assume that your entry is, you wait for it to get here, or somewhere, let's say somewhere right in the middle. You would now put a stop loss just under the lowest price, and I don't think it would go there. So that's 20% loss if you can afford that, or you would just hold into the next market cycle, which I would do. This would be my accumulation phase, and this is an Ethereum pairing. Usually I trade in Bitcoin pairing, but I like to accumulate Ethereum and Bitcoin. So I thought this was an attractive trade in the Ethereum pairing, which will give me an opportunity to accumulate more Ethereum. So at this cost, it costs 1.5 Ethereum for 1 Bitcoin Cash. But what I think after we do get after this bearish market, if Bitcoin does reverse and we do move on, or if Bitcoin does reverse in a few months or weeks from now, I do believe that this will play out another market cycle, and we'll get to each Bitcoin Cash worth around 4.3.4 even 5 each Ethereum. So you can make 3 more Ethereum just getting in on this trade per Bitcoin Cash you buy. So this is just an example. This may not even happen. This isn't investing advice. So make sure you do research for all the trades you get into. Just like I said, just because I said this is going to go up doesn't mean it's going to. Nobody can predict the price. You just use tools and indicators to help you predict where, the most likely price. And if it didn't hit that price, then okay, if it didn't do this, then it's going to do this. So you're kind of prepared for both outcomes. And that's what I love about TA. It prepares you for both outcomes, and I go with the one I think which is most likely going to happen, or whichever I have like a stronger gut feeling for, and that's about it. So use market cycles. Don't buy at the top. Be very patient. This move could take out this Bitcoin drop could take weeks to play out. So maybe now isn't the dip. 6,000 might not be the dip, 3,000 might not be the dip. You don't have to rush into buying it. Maybe wait for the confirmation, wait for the reversal, and then start buying some Bitcoin. You don't have to be a hero and jump in first. And that's about it for market cycles. I'll do more videos about market cycles. This is a huge topic that I can't just cover in one video. This is in multiple videos with other techniques and other indicators to help you trade and get a good setup going. So stay tuned for more videos. Follow our Discord, join our Facebook. It's growing. This is the best time to get education while the market is coming down. You're not over trading. There's not a lot of opportunities. So why don't you just get to the books, do some studying, do some research, do some practice. So when the bull market does come, you can just tear it up and make some mass profits. So that's about it. Stay tuned for the next video, and I'll see you guys then. Thanks for watching.